afternoon, everyone, and welcome to Stock Market Today. It is Allie Corum and Ed Carson here with a look at the market today. And it was a pretty whipsaw session as investors are continuing to digest the implications of the Russia and Ukraine war, Ed.
Yeah, you shouldn't get too excited over any half-hour move up or down. That's certainly the case today and the last several months. We did have Apple moving on a new iPhone event. Quanta Services flashed a buy signal, and Callon Petroleum had a whipsaw porcupine type day.
That it did. We'll take a look at all of that. But first, let's analyze the action in the major indexes today. So here's a look at the NASDAQ composite, finishing the day down about 0.3%. The S&P 500 down 0.75%. The Dow down about 0.6%. The Russell 2000 finishing in positive territory today. So this volatility, Ed, is continuing. Big price swings throughout the day. I mean, there was at one point in the session where we were thinking, hey, is this gonna qualify as a follow through day? We kind of hope not, but for many reasons, but ended lower today. So this was just a roller coaster of a day.
Yeah, a lot of wild action off of headlines. I mean, first we had President Biden come out, and we had knew that this was coming a few hours earlier, that he was going to announce a ban on Russian oil, which isn't that big of a deal for the U.S. or for world markets, but it's a symbolism. Then Russia's Putin came out and said, well, we'll ban exports of, raw material, key products. Well, that could be energy. It could be some of these nickel products. But he didn't say what they would be. That'll be announced later. So there was back and forth. So oil prices were whipsaw. This was whipsawing. The NASDAQ was down more than 1% at one point, getting very close to the February 24th lows. And then rose more than 2% intraday, then faded again. Pretty wild stuff. I mean, you could look, oh, look, it's really moving, but it's, it ultimately didn't go anywhere. It's like, it would have been really odd to have a follow through day. Justin Nielsen was doing some research, our head of market research, and he was showing some stuff that probably going to share on IBD Live tomorrow, but just talking about, I mean, rallies where we're following through below the highs of the bottoming day, below the 10, so below the 10-day line. That's just sort of odd. It felt, even at the highs, it felt more like a bottoming day. It felt more like a first day than that. And so we'll see.
Like what we saw in late January and late February.
Yeah, and also we'll see. I mean, even if we get a follow through day, we still have to get through things like the 21-day line and the March highs and the February highs and all sorts of things. There's just every place where you could, just all sorts of things that it could run into resistance and back and forth, and it would take very little effort for this to go right into below lows and just end the rally attempt altogether. So it's just one to be extremely careful in. Really should not get too excited about any kind of moves to the upside in the very short term.
That's right. And the NASDAQ closing just 5 points below the 12,800 level, and the low on that 24th was 12,587. So yeah, getting kind of close there. So we're going to be closely watching that level on the downside, but also, as you mentioned, I'm excited to really dig into some of those historical precedents on IBD Live in the morning. Let's also take a look at the S&P 500 here, back below that 4,200 level. Also the Dow, so blue chips for the day, heading further towards their late February lows below 33,000. Let's take a look at the Russell 2000. Again, positive for the day, but it doesn't really mean a whole lot that small caps were up today. What do you think?
Yeah, it doesn't matter. I mean, a whole lot. I mean, and closed near session lows, it doesn't feel like it's changed the character at all there.
Yeah. Okay. Well, let's take a look at USO, a proxy here for oil in the US at least. So what is this continuing to tell us, Ed? How should we interpret this?
Well, it's pretty easy. It keeps on going up and up and up. It was up like crude oil went up to about $125 a barrel. It's just amazing from where we were just a few weeks ago. There were some big intraday swings. It got up to 129, I think, intraday. Then I think it gave up all its gains at one point, or nearly did so. and then rebounded again. So this is whipsaw. And we see a lot of whipsaw in the energy stocks as well.
Yeah, so we will definitely look at that intraday action there. Pretty wild. And yeah, we'll take a look at that with Callon Petroleum CPE here soon. But also Apple in the headlines today with one of its product unveiling events, but finished the day down about 1.7% in some above average volume. It is holding up a lot better than many other technology related stocks, but that doesn't mean it's a buy here, Ed.
No, it certainly does not. I mean, and you don't know if it's going to continue to outperform techs. And besides, outperforming techs versus techs are not doing well, and this is falling. This is trending lower. I believe this was the worst close since late November. I mean, it's above the February 24th lows, but it's sliding. Look, if it can get back above the 50-day line, there might be an early entry pretty soon after that from a trend line. Market Smith isn't showing it, but the 176.75 could be seen as a double bottom base. It's looking messier and messier with with that slump. So, but if nothing else, that could be an early entry. So it's not crazy to see that bouncing back where a lot of other stocks are 30, 40, 50% off their highs. You can see a consolidation here. And the RS line is close to highs, but it's not actionable now, and you don't know if it's going to continue to hold up, even close to holding up.
And I feel like historically, when Apple has these new product announcements, it's not typically a time that the stock necessarily sees big moves to the upside on these headlines of these new products.
I think you're right. I think historically it tends to fall that week, one way or the other. I mean, not a big deal either way. And everybody sort of knew what was going to happen. They announced a lower cost 5G phone. I mean, there's always little details that come out, but I don't think anything fundamentally was shocking anyone.
Right. Okay. Well, we'll keep it on the back burner on that back watch list there. Never know. But technology isn't really the place that we are focused on. We're focused on those industrial names and those cyclical names. Let's check out PWR, and this is Quanta Services. So speaking of, this is in the building heavy construction group. Earlier in the session, it did not have that RS line blue dot, but by the end of the day, powering higher by about 8%. In some pretty strong volume that rivaled the volume that it attained after its most recent earnings report. Got it, that blue dot today, Ed.
Yeah, and it's just really strong action. There was a trend line break that you could probably draw and use last week's high as an entry point, kind of situation there. This does construction and engineering work for across a lot of things. It's not just, gas and oil pipelines, but they also do a lot of electrical grid, a lot of stuff with renewables. And basically with energy prices sky high, it's almost like any energy product is going to do well. We're seeing a lot of these heavy construction firms doing well in this situation. You should see how the earnings growth picked up in the last quarter. This was our stock of the day because it was acting well and it's in a strong group. So if you want to learn more about that, you can check out that stock of the day by Aparna. It was a nice article there.
Jojo is really jazzed up about Aparna's stock of the day article. Actually, I have a package being delivered. Sorry for the psycho dog today, everyone. Next on our list, let's take a look at Callon Petroleum. That is ticker CPE, backing off of its intraday highs, tried to break out of a consolidation here, but closing up just fractionally. And taking a look at the intraday chart here, just another example of a stock that really took a nosedive on those headlines coming out midday.
Yeah, really just wild action. And this is very common for Callon. I mean, just going back to the daily, there's something David Ryan called these porcupine charts, because there's all these places where it pops up and then immediately comes back down, either intraday or the next day, just on and on and on, where it has these big moves. And that just makes it hard, because the moment it shows real strength, that's the moment it really sells off, not just a little bit. I mean, there are some really big moves. This stock had a huge swing today. It ended up nothing. So if you owned it and you were slept through the day, it's like, oh, okay, another boring day. This has not been a leader in the energy group. It's doing fine versus the general market, but that's one issue. But this is what we saw with a lot of energy stocks, with a lot of steel stocks, there's a lot of volatility. So even in the sectors that are doing well, you still have to know that there's volatility, and it's just
Exactly.
tricky. It's just tricky. And you don't know when these trends are going to end. I mean, there could be a headline that comes out of Russia, Ukraine, and somehow this ends, and who knows how
Mhm.
anything goes. So just a very difficult market, even in the sectors that are working.
Right. And it shows that also, if you were waiting for this breakout to happen, that was a tough day today. If
Yeah.
you would have eyed an earlier entry, at least, maybe today's action, like you said, you could have just slept through it, and and closing, wise, no harm, no foul. But breakouts have still been a struggle, even with those strong groups. We saw momentum in transportation rail recently, in steel, so on and so forth. That doesn't mean that those trends are going to stick and you can just kick back and relax after you buy those names.
And I think on some of these things, and not necessarily this one, because it wasn't necessarily depending where you bought it, but where you have, if you get a short-term gain, 10% or even 5%, you might consider taking some partial profits to it just a little bit,
selling into this,
just to try to make sure you don't end up losing, because there's a lot of stocks, they look promising. Yeah, you talked about the rails, a lot of things. It's just so difficult. Nobody really knows what's going on. I mean, the market does a pretty good job of pricing it, but there's so much uncertainty. It's really hard to know from hour to hour where anything should be priced. And that the market's really struggling with that.
Mm-hmm. Yeah, take the gains when you have them. All right, everyone. Thanks so much for tuning in today. We will be back with more tomorrow morning on IBD Live. So we very much hope you tune in, investors.com/IBD Live. And just a couple quick announcements. So this Friday, our special guest on the IBD Live will be Kathy Donnelly. She is co-author of the Life Cycle Trade. I guess the co-trader in this, CanSlim community here. But always looking forward to getting her thoughts on the show. So that'll be this Friday. And then later on Friday, Dave and I will catch you on Barron's Live. We're going to be talking about the struggles with feeling that attachment to former leaders when they've come well off their highs, and what you can do to start looking at that new market leadership. So check out barrons.com/live for the details on that. All right, everyone. Thanks for watching. We'll see you back here tomorrow.